You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is 1 p.m. Central, 2 p.m. Eastern. Yes, it is time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, hopefully at least ever-informative these days, Options Insider Radio Network. Wherever you're hearing this fine program, whether it's at home, whether it's on your device of choice, whether it's on a tin can with string, make sure you keep those questions, those comments coming. I know a lot of you have them these days, and we love hearing from you. Again, we keep threatening to do all question episodes. We haven't been doing that at boot camp lately, so we're getting as many questions answered as possible. Keep those questions coming in. If you're available, 1 p.m. Central, 2 p.m. Eastern, we'd love to see you in there live. And, of course, however you listen in, whatever platform it may be, make sure you leave a review to help other people continue to discover Volatility Views, especially in these very volatile times. And joining me to help me break down this madness unfolding yet again out there in the volatility space. First off, let's go out to the MIAX hot seat. We're doing double duty out there yet again. First off, joined by our old friend there, Mr. Shelly Brown, the EVP over there at MIAX. Shelly, welcome back to the program, sir.
Hey, Mark. How are you? Glad to be back.
Glad to have you. Glad to see everyone is thriving, or at least alive and well here at this time on the show every week. And also joining us, taking up the other half of the hot seat, fighting back and forth with Shelly for space there, we have Tom JARCK, the volatility product specialist over there at MIAX. Tom, welcome back to Volatility Views to you as well.
Thanks, Mark, and hello, everybody. God, I thought I just blinked and a week went by, but here we are. Let's go.
And then also joining us, holding down the guest seat this week, it's that time of the year. That means he's back. It's Mr. Matt Amberson from ORAT's going to break down all the good earnings vol, as well as a lot of other fun stuff for us today. Mr. Matt, welcome back to the program, sir.
It's great to be here. Great to be on with Shelly. I'm looking forward to it.
And then last but not least, we do have from the Option Pit / Carmen Line World HQ, or perhaps a Costco near you. I don't know. Maybe he's shopping around. We'll find out. He is the greases and meatballs, Mr. Mark SEBASTIAN from OptionPit.com by way of Carmen Line Capital. Mr. Meatball, welcome back to Volatility Views, sir.
I would make a strong argument that I am certainly the least. You know, maybe you and I are in a little competition, but you look at this this pantheon of guests, and I have if you were to say last and least, I would not normally, maybe it would hurt my feelings, but with big dogs like Shelly Brown and Matt Amberson and the like, who would be insulted by being called the least?
Quite the august panel we have joining us today. All right, fine, you can be the least. I'll allow it as we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we break down what's been going on this week and indeed today from a volatility trading and trending and analysis and unusual activity perspectives. And oh boy, yet another week, a lot going on the volatility space. Perhaps not exactly what you thought coming into this week, which is what makes it interesting. Of course, coming into last week and last show, we were seeing all this optimism out there as a result of this, potential, I won't say a cure before a treatment coming out of Gilead. This week, not so much data coming out of some early clinical trials saying people actually had to be taken off the drug. There were severe side effects, so that's spooking the markets a little bit this week. But of course, all eyes really this week were on this crude oil apocalypse. It's kind of hard to call it anything else. I've seen terms bandied about out there, the black swan for crude and everything else. Because of course, at the beginning of this week, we saw that front WTI contract not just trading down to zero, listeners, but actually going negative, going all the way down to about minus $40 a barrel. Let that sink in for a little bit. We were just talking on TWIFO not too long ago about WTI around the $40 a barrel level. Now we're talking negative 40, so an 80 handle swing. As you might imagine, that was just wreaking havoc with all sorts of aspects of the market. It scared the hell out of the broad equity space because a lot of these big names have energy exposure and a lot of these big indices. Of course, in the ETP space, a big product a lot of you like to trade like USO pretty much had all sorts of issues. USO attempts to try to replicate that front month future. If you want to hear the whole kit and caboodle about what's going on with USO, I encourage you, if you haven't done so already, check out our TWIFO episode from yesterday. We did a deep dive, answered a lot of your questions about that whole death spiral between WTI and USO. But long story short, WTI went negative. That just screwed up everything out there in USO land. USO tries to approximate that front month future. They had already rolled out of it, thankfully, so they weren't exposed to that negative contract. But they were out in June. They started adding 20% of the second month out, and then they've changed it all completely now. They're all over the place. They're all over the entirety of the term structure because effectively there's so much AUM flowing into that product now that they've hit position limits everywhere they are. So they're gobbling up exposure pretty much every way they can get. They've also changed their role. We've seen products like USO and also VXX that attempt to approximate futures positions usually suffer from that negative roll yield. As a result, USO is an infamous victim of that. And they've also had this very regular roll schedule that the market could see and understand and fade. They've gotten away from that now as well, going to be a little bit more judicious with how they roll. So a lot of things going on out there. In fact, the company's marketing officer coming out the other day and saying, due to extraordinary market conditions in the crude oil markets, including, again, one of my favorite terms, super contango, USO has invested in other permitted investments as described in the prospectus. So this has just led to a lot more vol in the energy space. Products we used to talk about a lot on shows like TWIFO and others. We used to do a commodity vol breakdown here on this show, and for a while there wasn't really a lot of commodity vol, so we stopped doing that. But this week, I think all eyes are glued on the commodity space, in particular crude. So products like OIV and OVX, which are usually the products we use to look at, they're the VIXs effectively of WTI and USO. OIV in particular, it's completely useless. At least it got there for a while. It spiked from 150 to 2,150 in just a couple of sessions. So just insanity. Of course, once the futures go negative, that product effectively becomes nonsense. They're not really designed for negative contracts. So that really caused some issues. OVX spiking from about 95 to 325 over that similar level. Obviously, USO not quite having the same issues that WTI did going negative, but still having a lot of issues. And of course, on top of that, there was all the issues coming out of the economy, jobless claims, another about almost 4.5 million. That puts over 26 million jobs pretty much out the door since this coronavirus started. That puts unemployment, depending on how you calculate, somewhere between 15 20%. Also, if you were counting, about 23 million new jobs have been added since the end of the dark days of the Great Recession. So all of that and then some now out the door out there. And all that translates into today, where the market's yet again looking up a little bit, maybe a little bit of optimism from some earnings names, maybe WWE and their good numbers lifted the market. I don't know. Either way, we're up pretty decently across the board. S&P up nearly a full percent right now. The Dow up about 2/3%. NASDAQ up over 1%, about 1.15 or so. And, of course, our old friends out there, Spikes and VIX Cash, down a little bit from last show. Not a ton. Spikes down about 1.5 points to about a 37.5. VIX Cash down about almost 2 points to about 37.25. And our old friend VVIX, a.k.a. the volatility of volatility, down about 10 points from the last show. That's a lot of table setting. But there's a lot to be set and a lot to be discussed here on the show today. Matt, you're our guest. We'll start with you. We'll get to the earnings fun in a little bit. But first, like I said at the top of the show here, these are pretty much historic, unprecedented times here, yet again, for the market. What are your thoughts on all the madness we've seen unfold over the past week, sir?
I've learned that Cushing, Oklahoma is an important city, more important than I thought when I
yes.
When I dipped in, and I've been looking on Zillow for homes with a pool in Cushing, because I figure I could take 10 contracts, 10,000 gallons in the pool, and take delivery. So that I never thought I'd be saying these words, Mark, but I'm looking for a home with a pool in Cushing, Oklahoma.
Are you going to buy it with Bitcoin again?
Yeah. And other than that, it's been crazy. Who would have thought we were at October 19 levels in the SPY after all this stuff going on? And it's just it's insanity out there, Mark. So I'm here. I'm hoping Shelly Brown could help me figure this all out. I want an old story, and I want some comfort by the end of this call.
All right. So. He's my guy that I turn to for comfort as well all the time. So, Shelly, you've now been thrust into the hot seat, sir. What do you have? What's your thoughts on just the madness that's unfolded? Like we said, not just WTI, the future's going negative, but CME actually listed negative option strikes this week. Just things you never thought I would see coming out of my mouth are coming out this week. So you're an experienced hand in the option space. What are your thoughts about all this madness that's been unfolding this week, Shelly?
It's crazy times. Watching products go negative price and figure out how to price puts with negative strike prices. We've been scrambling here. I've had my tech guys calling me, do we need to support negative strikes? How does this work? What about price protections? There's a lot of exchanges of price protections that puts can't trade at prices higher than the strike price. And it changes the way we look at the world from an exchange perspective. It's a little frightening.
Yeah, it's more than a little frightening. I wanted to get CME folks on our TWIFO show that we do with them. Obviously, they're busy dealing with all this madness, but I do want to get them on in the near future to discuss just how all this impacts the underlying markets going forward. We're going to see listings of negative strikes. This changes the way people view these products fundamentally going forward. Everyone knew it was theoretically possible in some abstract sense, but it takes a situation like we have right now, not just a global pandemic, which is already unthinkable, wiping out 30% or 30 million barrels a day of demand, but also you have to have ridiculous accelerants like a price war between OPEC and Russia, adding fuel to the fire, and all of these absurd things that no one thought would happen simultaneously all have to conspire and happen at the same time in a 1,000,000 to 1 shot to get this negative listings that we're seeing right now, but that's exactly what we're seeing. Tom, you've been around the vol space for a while as well. What are your thoughts on just the madness we're seeing, not just in the commodity space, but in the vol space this week, sir?
First of all, on the oil thing, I actually had a friend of mine call me up and sent me a picture of 3 trucks he had found that he could load up with Cushing. Wanted to take a road trip with him, but he ended up not doing anything with it, but it was pretty funny. Definitely, interesting times. When I talked to some folks in the equity vol space, it seems somewhat orderly, but you got everything else, going crazy. And look at Brazil today, I thought was pretty interesting with the, 10% sell-off in EWZ. There's things moving. My personal, view on the U.S. markets is there's just, there's another, it's a general flight to quality. And I think that's the big aspect of the support, relative support for the U.S. market, as well as some of the vol.
And of course, the least, the greasy meatball, Mr. Mark Sebastian. Sir, obviously a lot's been going on this week. What's going on in your pitch chat? What are your crazies up to? And what are your thoughts on this unprecedented bit of commodity madness we've had this week?
Yeah, I actually spent some time investigating how much an oil tanker costs. And you can get one for about $8 million. But you have to get it from Singapore. So I don't know about any of that. But yeah, it was really interesting. We saw a real spillover effect, pun intended, of oil. And, why you have to be really wary of these retail products. Word out of China is that one of the biggest losers in this entire oil roll trade was an oil energy SMA run by the Bank of China that found itself carrying a giant amount of oil contracts outside of its risk parameters on May expiration, and was trying to roll out to June, and that was one of the reasons why this happened. Then, every time people make we get proof that you need some sort of floor about once every 10 years. And so when people are like, what's the purpose of the floor? What's the value in having a live person able to intervene? And then you see this, and you say, oh, there's the value in having someone able to intervene. I don't know that we would have gotten the craziness that we've seen if CME had one, a floor, and two, I was surprised to learn there is no downside limit on oil. Did you know that? There is no limit down or limit up in WTI. And so
the other day.
I think CME learned a lesson there. So they finally, and if you're wondering whether algos were involved, take a look at the price action of crude as soon as the CME said closing and hedging only for July and June and May. And you will find that, there was, I don't think nefarious is the right word, but the idea that some of these quote unquote liquidity providers actually provide liquidity is laughable. And what happened in oil and what happened in WTI is an embarrassment, and it should, I understand that there are storage issues. There are. But what happened should not have happened, and CME, that is embarrassing and shows that there was, there needs to be an investigation into the players that were out there running algos on this, because this got way out of hand. And, the people, and just to put things in volatility perspectives, people are like, well, the VIX can't go to 85. VIX can't go to 100. The OVX, which is the VIX of USO, went to about 500%. And the OIV, which is the VIX of WTI options, traded about 1,300%. So when you say to me, Mark, this, vol can't go this high, vol can't do this. My answer is it can and it will. And if you are so arrogant as to think that circumstances can't happen to blow up your account, and you don't have to take into account markets blowing up, you need to take a look at what happened with crude. And if I needed to make a one more strong point on why we close options worth less than 10 cents, there was all kinds of opportunity for some of these downside puts to have been closed months ago, and they weren't. So there's just lots of black eyes to go around on what's occurring in crude. But CME needs to go in and fix the contract specifications because they didn't have a trip wire to stop the electronic trading like they do in the ES and in SPOOs. And that was really what in the end I think drove everything as crazy as it traded.
Yeah, there certainly is going to be a very fascinating postmortem on this. It already has begun. We're already hearing a lot of things. I've heard similar things that you have, Mark, about this Chinese fund that effectively had a structured product that gave them a lot of exposure to front month WTI, which they, for some strange reason, carried all the way through expiration. Everyone who knows and uses these products knows you got to get the heck out of Dodge before that WTI, or say USO, actually rolled well ahead of that. I saw some very widely accepted, widely read articles out there blaming all of this on the USO roll. Again, we touched on this on TWIFO yesterday, but that is demonstrably not the case. USO was already out of the front month contract. So everyone was out there saying it was USO crushing the bid in that front future that drove it negative. That is not the case. USO was out. They were already into June and indeed July by that point. So yeah, people who are disseminating that out there, that's an easy thing to check out there. So go check that for yourselves. We can keep talking about this all show. We're going to touch a little bit more on the vol space, obviously. It is in the name, after all, even though crude driving all of this vol, or most of it at least, this week. Coming into showtime, we're seeing an interesting setup out there in the vol futures. We have been talking for so long just how crazy backward the futures curve out there in VIX land is and how crazy backward the cash was to all of that. This moment, not so much. Come into showtime, we saw the cash actually a little bit below that May future. It's been a while since we've seen that. Remember, not too long ago, at the beginning of all this, we saw the cash 16, if not more, north of where the futures were trading. Now the cash back below it. That front future, obviously still backward to the rest of the curve. That was about not quite 2 points distance, about 1.5 points from the June future, but still the cash below that May contract, which is kind of interesting. Maybe a sign that things are settling down, or perhaps a sign that the market's just taking its breath before we go off to the races yet again out there. Moving on to Spikes land out here. Same deal as kind of last week from an OI perspective. We saw, of course, the big 1x2 trader took a lot of that off. Some of it went through expiration as well. And as we said before, with VIX and 50 cent, once you get that nice big moonshot in the vol products, they kind of need to reset a little bit before you can put it on again, which is undoubtedly why he's waiting to put it on yet again. Or maybe he made all he needed on that first time and he's good for now. Either way, still waiting to put that on. Something similar to what we saw in the VIX options as well, with our old friend 50 Cent talking about other products as a hedging mechanism going forward while the volatility resets itself. It has come down quite a bit, not quite really at reset levels, though, out there. Speaking of VIX, so by the way, overall spikes we're seeing the big positions out there right now are the June 95s, then the July 24s, June 75s, and the July 100 calls. Someone's playing in the par calls in July out there in Spikes land. Interesting. Like I said, where's the Bloomberg guy calling up when they traded 100 of the VIX pars? Where's the Bloomberg guy talking about the Spikes pars out there? And moving on out to VIX options land. Come into showtime. The volume has come down significantly out there. Remember, the ADV is off over 1 million contracts a day from where it was just a few weeks ago. Right now, it's at about 387,000 contracts, so not even 500,000 anymore. And today, kind of reflecting that. Coming into showtime, we saw not even 200,000 contracts on the tape out there in VIX land. Let's break down the top 10 really quickly. Number 10, only cost you 95,000 contracts to break into the top 10 in VIX land. Another sign of how things have quieted down a bit out there. That gets you to the May 40 puts. Number 9, 95,000 as well of the May 17 puts. And then we got number 8, 98,000 of the May 13 puts. Number 7, $1.03 of the May 45 calls. Number 6, we've got 113,000 of the July 28s. Number 5, 118,000 of the June 15 puts. Number 4, almost $1.20 of the May 32 halves. Number 3, 121,000 of the May 60s. That's our most optimistic strike on the top 10 here this week. Number 2, $1.26 of the May 28s. And rounding out the top 10 out here, about 148,000 of the May 35. Only cost you 148,000 contracts to take the top spot in VIX land. Another sign that things are pretty light out there. Let's do a quick breakdown here of what's been lighting it up this week out here in VIX land. Like I said, today kind of quiet, only 182,000 contracts on the tape. The big prints are about 25,000 of the June 24 puts and about 23,000 of the May 30 puts. Pretty much all puts. The top 5 are all puts there. 20,000 of the June 20 puts, 15,000 of the July 22 puts, and about 10,000 of the May 35 puts. Going out to yesterday, a little bit more paper, not much, 250,000 contracts. But looking at the big prints out here, the big print was the June 62 half, 8,000 times, as well as looks like a couple of, it actually looks like a roll. June to July, the June to the July 80 calls. Someone keeping the 80 call level alive, 7,330 times, and about also looks like a bit of a straddle going on out there in August, the AUG 35. Or maybe a bit of it looks like a straddle out there. Wednesday, pretty light as well, 130,000 contracts with, let's see, the big print, 30,000 of, again, looking at these May prints out here, which are all crazy because of my system right now, showing 0 strikes. So we'll dig into that. And then Tuesday here, 317,000. We got the big prints out here are the April 50 puts going up for $4, 11,000 times on the bid. Looks like a bit of a risk reversal. A couple of them as well. 9,213 of the April double calls against 6,152 of the April 65 calls. So a bit of a ratio vertical there, as well as 6,136 of the April 28 puts. So maybe a bit of a bullish risk reversal out there. Either way, all that going up mid. You saw that same size again going up 57 halves against 67 halves on a ratio 9/6 against 6 of the April 30 puts. So doing it a couple of times at a couple of different strikes. Monday, 216,000 contracts. The big trade looks like a July put 1x2. The July 26-21 put 1x2, 5,500 by 11,000 times. It's like paper selling the 1 and maybe buying the 2 out there, which is kind of interesting. Opening on the 2, by the way, so it could be a bit of a house money roll out there as well. And then we've got a couple of, looks like a vertical, the May double SEP 60 roll / diagonal 7,750 times, buying the May, selling the SEP. All right, Mr. Meatball, not a ton to unpack out there in the overall VIX options space this week. Anything catching your eye out there this week, sir?
Yeah, I'm kind of starting to pay attention to kind of the flatness of the curve, of the VIX curve and the spikes curve. And, there's some real opportunities to trade that using options. We did see upside vol start to get a little bit of a lift, downside vol start to come down a little bit. So things have started to, maybe start to partially normalize a touch on, some of the VIX options and some of the different trades. I didn't see any crazy trades go up. Personally, I think that, what's really fascinating is, as we've done the show, we're now in a weird scenario where the May to VIX the VIX cash is now trading below the May future. It is still above everything else, and the May future is above the June. But we're now and spikes is the same way. We're now in a weird spot where there is, a tendency to want to short the May contract and or May VIX because, there's now a thing called contango. I don't know if this counts as coming completely out of contango, but it's definitely interesting.
Yeah, not quite completely there yet, but it's certainly far closer along the path than it was, let's say, a few weeks or a few months ago. Tom, I know you watch a lot of different things in the vol space, not just the listed stuff, which clearly you have a keen interest in over there on MIAX, but also on more of the, shall we say, exotic side out there. What's been catching your eye out there over the past week, sir?
Not so much, just in general, I guess you've seen some headlines out there about some P&L situations. Just wanted, I could talk a little bit about just some of the dynamics. So first, I wanted to kind of add on to what Mark was saying. A lot of folks out there look at the VIX term structure. Others look at the money forward vol as a term structure, as kind of more of a gauge, because obviously the VIX products and spikes products all include the skew component and convexity component. So looking at the term structure, to me, looks even almost a little bit more normal in the very short dated. As Mark was commenting on. So I just wanted to put that out there. But just in general, I think, the moves in the market recently, some of the banks you've heard of in general have done from earnings have done overall well, and others have taken losses. And, the term always comes up, exotic products. So one of the things I just I'll go into is just, in general, a lot of the banks that are in the exotic world, through structured products or doing trades, they're called auto callables. And through that, they get a lot of, there's a lot of skew embedded in it, a lot of convexity, short correlation. There's different components. A lot of the correlation comes from index hedges put on those to hedge out those products. But a lot of it's also because there's some headlines about dividend futures. These products also get the banks long dividends. So what I thought was interesting in the move we just recently had, you can model some of that stuff out using dividend yields and applying your deltas to that. But in a situation like we just went through, I mean, the market went down. Yes, fixed dividends went down with that. Yield kind of stayed the same. But then, with people cutting their dividends, then you got a real, a yield move and another fixed dividend move. So that it generally hurts a lot of the trading books that have a lot of these exotic products on them, and of course the short correlation. So I saw something one of the write-ups that said something like, when VIX spikes, it's always tough for these guys. Well, yeah, because usually when VIX spikes, there's a pretty decent down move in the market, which correlation goes up, dividends go down, and it's kind of a lot of what the other side of those trades are. And a big component of the auto callables as well is as markets, and I won't get into too much detail on this, but as the markets move, the books have to adjust their Vegas, and the Vega duration also changes. So the length, where your exposures are changes, as well as from the skew part, your Vega portfolio changes. So as markets go down, typically they're selling more vol to hedge out these products. But at some point, there's a knockout effect where the product disappears, and that leaves the dealer community short volatility Vega via all their hedges they've done, but their underlying products have disappeared. So then there's a scramble to go back and cover that Vega again. Another constraint on the institutions from the regulatory side is that because when there are these moves in the market, typically risk capital, everything gets kind of constrained. So there's more like needing to hedge and unwind, and it kind of exacerbates on itself. So I hope that makes sense. But I just wanted to, like that. And, you can look at the dividend futures on S&P or on Euro stocks, and you can see how those things have moved pretty drastically. I think the S&P 2-year dividends are still down like 35%.
Yeah, Tom, one thing I've learned is never to exacerbate on myself. I'll tell you that much. But you bring up a lot of really interesting points about how it takes a lot of these structured products, a lot of products that really most people in the United States are not used to seeing and trading, can have a real profound effect on the overall marketplace. And even within the United States, if you're not really aware of, even listed products, you can create some unintended consequences. So, one of the things that we've been talking about here and a little bit on Option Block is take a look at the makeup of what the spikes and the VIX are based upon now, and what they were really based upon when these indexes were created. It is fascinating how the VIX is really measuring volatility on a completely different asset than it was in 2006, or the spikes even when it was listed, 2 years ago. I think I read Microsoft now is a bigger piece of the S&P 500 than the entire energy complex. And whereas in 2007, what percent of the S&P and SPY was the energy complex, and what percent was Microsoft, Apple, and all of those? The VIX and the spikes are going to start really correlating highly to triple Q vol, and so we're going to start seeing, I think, some dispersion trades really start to go up between, I think NDX, SPX, and VIX spikes, and some of the other, and using those products as a hedge on things like the triple Q. They're going to be effective in ways that they've never been effective before. But if you're carrying a big energy portfolio, it almost does. The VIX doesn't even hedge you that much anymore. You need to go right into oil. Markets move around and change in ways that if you don't pay attention can completely fool you and catch you flat-footed. And that's a little bit of what I think VIX is going through right now. 10 years ago, the OVX, the OIV, the CME oil index going to 1,000, VIX would have gone to 200. On Tuesday it went to 45. It's incredible how how things can change.
That's funny you mentioned that. That's a point I've been trying to make for a while, particularly when a lot of, the broad general financial media contacts us and they're trying to make these broad comparisons between 2008 and now. I always have to walk them back and say, well, this is a very different environment than what we saw. I mean, the underlying, the vol space, everything is completely almost different than it was back in 2008. So drawing these just straight unilateral, straight line comparisons from one to the other, it doesn't really work that way. And that's just yet another example of why that's the case. Matt, I know you're my go-to guy for all sorts of data and analysis. And a lot of those models you like to run over there incorporate perhaps a divvy or two. What are your thoughts on what Tom was just saying about some of these exotic products, including the dividend futures and what he's seeing out there, Matt?
Yeah, I appreciate that, Tom, because I saw in our data, so we do implied dividends. And we do implied dividends on so all the components of the SPY, for example, we'll do a weighted average of all those implied dividends. And we also, sell a dividend feed, and we're always looking at implied dividends in order to look at and assess whether a company is going to cancel their dividend or not. So we've had a lot of cancellations. So we've been really busy over here. And I didn't realize what Tom had said, that a lot of these structured products are getting banks, long this dividend, and that's affecting the implied dividend. So that's, I'm looking at my graphs now, and I'm seeing that the SPY especially had, the implied dividend just got creamed as the market went down. And I'm wondering if if what Tom was saying had something to do with it. So I just wanted to chime in there, Mark, that we really look at these implied dividends, and during the coronavirus crash, we really saw what I thought dividends go much lower than are now, now that they've come to, but also than when we were predicting, just shortly after the crash, Mark.
Yeah, it is interesting. We have seen a lot of CEOs out there and others who get they're slashing their salaries, but not slashing the dividend because they're also large equity holders in their companies. Sometimes a little bit of reluctance to do that at the end of the day. The PR side, I'll cut my salary as we're furloughing employees. On the back end, of course, they're collecting all those juicy dividends, but that's a conversation for another day. Let's move on out. Speaking of juicy, going out to VXX, a product a lot of you like to fade. Hasn't been playing along with you this week. It's up, actually. It was up about 3 points from last week, right about a 42.5 or so right now. Decent paper today, about 72,000 contracts, the ADV is a little bit shy of $250,000, so that one's coming in quite a bit as well. We're coming up against it here, so I'll just do a quick top 5 in VXX land right now because I want to dive into all the earnings fun with Matt here as well. But to number 5, we got the June 20 puts, 51,000. Number 4, May 20 puts with about 53,000. Number 3, about 59,000 on the May 24 puts. Number 2, 62,000 of the June 16 puts, and number 1 with the bullet out there, 96,000. Again, the pretty sizable number 1 spot here for VXX. That is the June 45 puts, total of about almost 2.5 million contracts outstanding. It's about 1.65 million on the calls and about 835,000. Excuse me, 1.65 million on the puts and 835,000 on the calls. But I said at the top of the show, it's that time of the year. Matt's here. We're going to get right into it. It's earnings season. Remember, listeners, if you want the full reports, the earnings move results reports, the season reports, all that good stuff. Matt and his team cranking out a lot of data for you guys over there. You can find it all at theoptionsinsider.com. If you want to kick the tires and maybe upgrade to the crazy versions, orats.com, ORATS.com is the place to go. I'll just set the table for you here. A lot of big names hopping off this week. Monday, Halliburton, our friends over there at Ally on OPR over there. IBM, Tuesday, Buffett's favorite name, Coca-Cola, Mr. Meatball's favorite name to write puts in these days. Netflix, actually, he was writing puts in Berkshire Hathaway, which is, I guess, is a long way around to writing puts in Coke. That's a conversation for another day. Snap, Chipotle, IB had some issues on Tuesday with this crude oil snafu, losing quite a bit, about 88 million, I think it was, over that Wednesday. Delta Airlines, AT&T, Quest Diagnostics, NASDAQ, TD Ameritrade. Thursday, we had Domino's blowing it out the doors off. Everyone's getting pizza these days. Southwest Airlines not blowing the doors off. E-Trade, giving a little bit more insight into that merger over there. Dow Chemical, WWE also blowing the doors off out there. E-Trade, Intel, and today we got Verizon, easy for me to say, Verizon on Friday. And Amex after the bell as well. Matt, that's a lot of table setting. I know there's a lot of names that have been popping off. We've got some new reports as we speak. You're the keeper of all of our earnings data out there, sir. What's been lighting it up for you out there so far, and what's catching your eye out there so far, sir?
So I have to say that we've looked at earnings season, and you pushed me into making this, Mark. So I always say that. We have this earnings season report that looks at weeks 1 through 6, which is about the length of the earnings season, and we average all the moves, and we see what the implied moves are versus the past moves. The implied moves, of course, from the straddle, the front month straddle, and then we take out what we think is going to be left over, and we're left over with a prediction of the option market for the move after the announcement. So what we've seen in this report is that the first couple of weeks, the companies that are able to get their quarterly earnings out kind of early, don't have as many surprises, and the option owners don't do as well. But what we've seen is weeks 3 and weeks 4. Those are the companies, maybe the mid-tier, smaller companies that actually surprise and move usually more than it is implied. So what I've been shocked about so far was week 2 was the implied earnings was so much higher than the past, and they very, very much underperformed. I mean, there are some, a couple of stocks that did go and move farther than the option market expected. You mentioned the WWE, Snapchat moved a lot, but for the most part, it was bloody for the option owners on week 2. Now, do I expect that to continue? I don't. I think week 3 we'll see a lot more volatility, and week 4 especially. That's what I've been calling this whole time. But really, I've been shocked on how little these firms have returned to their option owners. So the straddle owners, our friends, the long side, have not done well this last week. But I'm expecting a bigger returns for them on weeks 3 and especially weeks 4, Mark.
Yeah, if you haven't done so already, listeners, make sure you check out, of course, the earnings move and earnings move results reports, but the earnings season report is pretty fascinating as well. I encourage you to check it out. Again, the earnings season just kicking off, but it'll give you a bit of an interesting notion for any trends developing. We always talk about this, if they blow the doors off and start blowing through their straddles one season, the next season, of course, they're going to overprice and perhaps underperform. And it's this interesting little cyclical dance that they do. You can see how all that's unfolding and much more. Of course, the big question mark, how is the COVID-19? A lot of names, I listened to a few calls yesterday, and a lot of them saying we just can't give guidance right now. We have literally no idea how this is going to impact us in the long term, and no one really does. So that's putting a big question mark in a lot of these names and numbers, which is kind of interesting why some of them are rallying as hard as they are when they're coming out and saying, we have no idea what's going to happen in the future. Usually the market likes a little bit of certainty, and we like a little bit of your questions, so let's get to it, some of your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody. Welcome to the Vol voicemail. You guys ask us questions. Sometimes we turn the script around, ask you guys questions. We kicked off the week with a fun one. Then we'll get serious. We kicked off the week asking, let's just take a break from the madness and the negative headlines. What is your favorite floor trading movie? We found 3. You guys had others. A lot of people wrote in and gave nominations for Ferris Bueller's in the other category, which I had forgotten there was even a trading floor scene, which is why I love doing these polls, because we always hear things we forgot. But Trading Place is running away with it, almost 72%, 12% for Rogue Trader, easy for me to say, only 9% for Quicksilver, the little heralded Kevin Bacon bike messenger / Pecos trader movie. You got to watch it just for the end when he strolls onto the floor of the Pecos with a visitor's badge in the middle of earnings season, middle of the most crowded pit, and just starts slinging size. It's fantastic. You got to watch it just for that. By fantastic, I mean absolutely ridiculous. Coming into today's show, we've got another poll out there, a little bit more dire, perhaps. All this madness going on afoot right now in the crude oil space. People are wondering if USO is going to join XIV on that kind of Franken product dustbin of history. So we asked you a simple question: is USO still going to be around at the end of the year? Coming into Showtime right now, it's pretty contentious. It's 57% for yes and about 43% for no. That's going to go for a few more days out there. So if you haven't voted yet, at Options is the place to go. If you have some strong thoughts either way, let us know out there. Speaking of strong thoughts, a lot of you had thoughts last week about what Andrew was saying. He said on the show last week, I've been trying to buy VIX options for a couple of days, and the bid has been very consistent. The only way to get trades done is to buy the offer. That really shouldn't be happening if this rally is real. A lot of you responded to that with some thoughts. We got a few of them here. Dario Pellegrino, I like that name, saying this is over. The rally, I'm assuming you mean, is over for sure, maybe. And then we've got others out here chiming in. Let's see, Victor, this could handle. Victor Victrola saying, in my experience, this happens where markets don't have much liquidity too. So market makers try to maximize their profits by making you pay the ask. Yeah, that's kind of what Andrew was saying. You got to kind of lift offers to get anything done. Staying on the silly side, we got Stadini in the chat saying, I'm enjoying my Clorox cocktail and listening to the show. I like to saute my meatballs in bleach. Well, I'm glad you're having fun listening there. Frank chiming in on the crystal ball. Is it possible that the meatball will win the crystal ball again? Well, let's not go crazy. He is A, the least of us, and B, he won, I think, like once in the last couple of months. So let's not go nuts. Here's one for you. Speaking of the least of us, Mr. Meatball, this is a good one. This is up your alley. Jack has a very simple yet deceptive question. He wants to know, why is VXX up this week, sir?
I don't think VXX is up anymore. It probably was when the question went up. But this this is about term structure. So the thing to remember with VXX and all VIX ETPs, and when they come up with spikes ETPs, it will be the same for that, is that they are on a day-to-day basis driven by the spike index / VIX index. All right. But over days and weeks and months, they are driven by term structure. So while VXX on a day-to-day basis is going to track a VIX future or the VIX, on a week over week, month over month time period, it is going to track term structure. And over the last 2 months, really almost 2 months to the day, we have been backward in the VIX complex. The VIX complex, save the cash index to May, is still backward, which is going to create a natural drive for double X, as we like to call on the floor, to move higher, and UVXY to move higher, and TVIX to move higher. And then over, once we head back into a contango, that is where you'll see things get driven lower. But for right now, VXX, the wind is at its back, not in its face, which is rare. But when it is, it's not a time to be short the bananas out of it.
Yeah, we were just talking about USO earlier, suffering from that roll yield in the quote-unquote super contango, kind of the opposite in VXX right now. Not quite. I mean, it's getting back to a normal contango. Not quite there yet, but it's not a super contango, and it certainly was a little bit more backward, probably when you sent this in here. Who is this? Jack. So that's gonna give VXX a little bit of extra juice. Speaking of juice, Matt, you're my go-to guy for all sorts of earnings-related strategy back testing. NEILP wants to know, is it worth it to squeeze some juice by selling iron condors 1 week before earnings and then closing them the day before, or maybe just right before the earnings announcement? Or maybe I'm just spinning my wheels here. Mr. Matt, we have all sorts of people coming in and hitting you up with different permutations and flavors of earnings trades. This week it is selling the iron condors 1 week before and then buying it back immediately before the announcement. What are your thoughts on that one, sir?
So this is one of the things that you could do. I just couldn't get it done quick enough for the show right here, but I saw this question. What you can do in our backtesting software is you can put a list of stocks in there. So let's just say we'll put 20 stocks or so, and you can simulate an iron condor. And what type of an iron condor, you could set that, is it a 30 delta, 10 delta? And anyway, you could set up that iron condor. And then you can choose the entry point could be the days before. So it could be, like 7 days before, 5 days before, as you say. And then the exit point you could set at, where in relation to earnings announcement. 1 day before, 2 days, or X numbers before or X numbers after. So definitely can do that. And we've done a lot of these tests, and I should say that I don't think you're spinning your wheels. I think a lot of these strategies are very interesting. And as Mark has pointed out many times, often the earnings is just a crapshoot, but a lot of these other types of trades, like trading up to the earnings announcement or trading just after the earnings announcement with the implied volatility versus where you think it's going to be, sometimes those are strategies that have a little bit more edge in them rather than maybe a crapshoot of how much the stock's going to work. So, hopefully that helps. And like I said, I'm running that right now, so I don't think it'll be done before the show's over, but it's a very interesting question, and I don't think you're spinning your wheels, Mark.
All right, we got to move on to the crystal ball. We got so many questions here. I want to try to squeeze a few more. Maybe we'll run a little bit long again today, just because we like you guys so much out here. JJC wants to know, why has no other flavor of VIX really caught on with the trading world? VIX is a huge hit, but other variants and iterations, not so much. Yeah, we've talked about this on the show over the long history of the show in the past there. And you're right, JJC. They have tried to throw a lot of other things at the wall, both at the SIBO with the single name VIXs and the crude VIX, other things. None of them really ever took off. And then, of course, we've seen other people try to break into the space and usually not get their products listed. Shelly, you guys are one of the few that actually have gotten your products listed and out to the public over there at MIAX with Spike. So you're uniquely qualified to, I think, answer this question. What are your thoughts on why it is so challenging for whether it's SIBO and other iterations of VIX or other players trying to launch other flavors in the vol space? Why is it so hard to get these products to catch on?
It's a great question. It's something we've been asking ourselves for years, and thus we're working with Simon on the Spikes project. it's a big lift to try to unseat a competitor that's so well entrenched in the space. And SEBA's done a great job with the VIX product. They've done a great job marketing it. And the users like the product for so many reasons, but there's things about the product that they don't like about it, and that's what we tried to address with spikes. We are starting to get some traction early on. Once the future listed, markets were tightening up, and then we had to delist the future for whatever reason. We're still working on that. We are working with the commissions on a reasonable methodology to get that future relisted. And once that future is relisted, I think we'll start getting traction again. But it's hard to get people to change what they're used to. It's hard to get people to trade in a product that is still relatively new. Even though the calculations are available, we've been calculating the index back several years. The correlation between VIX and spikes are extremely high. Obviously, the correlations between the SPY options used in spikes and the SPX options used in VIX are very high. So we believe it will be successful. We've solved some of the problems that were inherent in VIX, and we think we have a better product. But without the future, we're trying to work with one hand tied behind our back. And I think once we get the future relisted, you'll see some additional success, but it's going to take some time. We're taking on an established product that they've done a very good job with. We have to get people to change behavior and change their thought processes.
Well said, sir. We'll leave it with a little bit of nonsense from our chat again. Stadini saying, I guess he's continuing to drink his Clorox. He looks like a bleached whale here in the last few minutes. Well, don't pass out, at least before the show's done, Stadini, because we got one more segment. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the Crystal Ball. You guys know the drill by now. This is where we attempt to prognosticate wildly about all things vol-related. And let's see, last week we were joined by Ilya Fagan from Wallach Beth Capital. He was feeling a 42. I was a little bit lower. I was about a 40.5. So that was kind of pretty much, I guess you can say, kind of unched a little bit up from where we were this time last week. Mr. Meatball was at a oddly precise 38.12. Tom was in the 35-ish range, as I recall, which is getting very political there. Getting himself a nice little bit of wiggle room. He's learning how to do this dance here. And coming to Showtime, we're seeing spikes at just about a 37, 36.95. A similar level for the VIX, about 36.75 or so. So no one technically is within our 1-point threshold for winning. I guess it depends what part of 35-ish Tom is at. If Tom's at 35.99, then I guess he could be close. So maybe we'll be charitable. It has been 2 weeks in a row, Tom. You've been kind of somewhat precise, even though your guess was a little bit wide. Old market making trick. Make it as wide as you can. So I guess, Tom, you get the pride of place of going first this week, or you can choose someone else to go first if you like. What are you feeling, Tom?
That's all right. I can go first here. I'm going to put out a full handle number once again, but I will exclude the ish, and I'll go with 36, the figure, as we used to say.
Oh, 36 even. Interesting. So not quite a vol explosion or implosion, I should say, more of kind of like a little bit shy of to pretty much where we are right now, effectively. And then Mr. Meatball, you were, I guess, second. So we'll go out there. What are you feeling for next week, sir?
I'm going to say, I'm going to say 34-13.
34-13. So seeing a little bit more juice squeezed out of this orange out here. So that would be almost exactly 4 points lower than what you were picking for this week. Our guest was last. So the guest should go last, but you know what? I'm a charitable host. So I will allow you to go next, and I will go last and have to pick up the rear. Yet again, how challenging that is. I need to be more accurate. Then I'll go first. Mr. Mr. Matt, what are you feeling this time next week, sir?
So I'm feeling it's going to be a pretty good earnings week. You're going to get a lot more moving around. I'm going to say 40, the number.
40 even.
Ooh.
40 even. So a little bit more juice coming back in that old. So Mark's squeezing the juice out. You're injecting the juice back in to the orange out there. All right, so we got an interesting run here, listeners. 34-13 on the downside, an actual handle in Tom from 36. Matt at a clear 40, which is interesting. And again, one of the reasons why I hate going last, because it carves up my options, pun intended, a little bit out here. We're at about 36 or so and a half or so out there in VIX land right now. So, I've been leaning and fading a little bit more every week in the last few weeks. That's been wrong. But, the moment I'm thinking about breaking is, of course, the moment that trend will kind of buck itself. Tom's at about a little bit shy. I'm going to say we're going to go back up to kind of unched this time next week. I'm going to say 37.5. So that means on the downside, we got the meatball, 34-13. Then we got Tom after him, 36. Me at 37.5. And Matt doing the rare bit of upside appearance, taking the Dr. Rhodes, soon-to-be Dr. Rhodes tack there to the upside there. That's your vol market for next week, listeners. All right. Unfortunately, or maybe fortunately for Stadini, he might have already passed out from drinking his bleach. Unfortunately, that music means we've come to the end of yet another epic week on the vol space. Who'd have thought when we were here last week, we'd be talking about negative WTI and all these other things. Every week, it's something crazy, it's something new, it's something unexpected. So you got to tune into Vol Views every week, listeners. It's a different show, quite literally these days, every week. So tune in every Friday or get it after the fact, wherever you like to get your podcasts, because it's definitely a bit of a necessary show, I think, in these crazy times. But before we go, they go back around the horn. Let's start with Matt. You're our guest, so I'll give you pride of place, sir. If folks want to learn more, they want to kick the tires on those earnings reports, maybe they want to try some back tests for themselves, where should they go? What should they do, sir?
Going over to orats.com. I don't know if you guys know Tradier, but they're a retail brokerage with an API.
Oh, yeah.
They've asked us to make some live ORATS theoreticals on their products, so we're doing that, and that should be out by the time this airs. So that's going over to Tradier and check out ORATS there, and hit me up, Matt at orats.com, and let me know any questions about earnings, about back testing, about iron condors into earnings, anything. So thanks for the show here, Mark.
There you go, Matt at orats.com, or hit him up on the old Twitters at OptionRats. And Shelly, same question for you. If folks are intrigued, maybe they want more information on what's going on with Spikes futures or Spikes options, I just want to hit you up about some queries. Maybe this whole negative strikes thing has got them rethinking how they look at exchanged products. Where should they go? What should they do, Shelly?
You can reach out to us via our website at MIAXoptions.com. There's a full Spikes webpage there. You can get all sorts of historical data and anything you want to know about Spikes. And there's contact information there for our sales team. If you just reach out via Spikes, you'll get straight answers from myself and Tom JARCK. That's what we're here for.
There you go. MIAX options/Spikes is the place to go to begin your journey. It's got all the great data there as well. If you want time series or historical data or settlement, anything on Spikes, it's all there. Or just type MIAX and Spikes into your browser. You'll find it there as well. And last, and he says least, I'll be charitable and say not least, Mr. Meatball, sir, if these days I want to join a little cool vol trading club, and quite frankly, who doesn't, where should I go? What should I do, sir?
Make sure you go to optionpit.com. I'm putting out a couple of newsletters that you can get for free that have some really good analysis. And all you have to do is give us your name and your email, and we'll make sure you're getting some awesome knowledge on volatility and on trading.
There you go.
For instance, our most recent blog report was titled "The Market Has Feelings." And it does.
I saw that one, actually. I thought it was a good little bit of headline. And so that headline intrigues you, listeners. You want to learn more. Maybe you want to get a sweet option MAGA hat. Maybe you want to join the Vol Trading Club and learn the secret handshake. OptionPit.com is the place to go to begin your journey. And on behalf of Tom and Shelly and the Greasy Meatball and Mr. Matt, who likes to buy property in Bitcoin, and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in such great questions, for sharing with us your current state of inebriation in the chat, and much more. We appreciate it all. We'll see you back here on Monday for more of the option block, and it all kicks off again, and we come right back again here on Thursday for more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.